Alright everyone, Cowboy Trades here, welcome back to the channel for another update. So, a new monthly candle body has just opened for Bitcoin. What's its next move? What happened yesterday with the scam pump? And more importantly, is this the start of a bull market, or is all of our macro analysis still completely intact? Let's talk about it. Well, what happened yesterday? Well, as you know, we talked about this on the channel. We had some extremely bearish economic data came in. GDP came back the worst it's been in 5 years. However, the markets decided they didn't care about this, and they only decided to care about what Powell said. Powell had a mix of dovish comments, hawkish comments, dovish comments, hawkish comments. The guy was moving like he's got bipolar, but nonetheless, the market seemed to really enjoy that. And as you can see, Bitcoin broke out of this bear flag. We're still very much range bound. If we do delete this bear flag right now, you can see boom, top of the range right here. We haven't even reverted back to the top of the range, around about 17,500. What does this range also correlate with? Well, let's drag it back. Boom. Bitcoin's quote-unquote bear market lows back at 17,600. Remember when, like 1 month ago, a few weeks ago, everyone said 17,600 is the bottom, and now we're up at 17,100, and we're in a bull market, right? Yeah, yep. No, nothing's changed. Nothing has changed whatsoever. Come over to the S&P 500. Let's look at the higher time frames. Now, let's actually check out our wave count first. Slightly lower time frames on the 4 hour. You can see we talked about this in this video over here, and even in, you know, the lower time frames, this is the 4 hourly time frame. Nothing's changed. You can see bearish 1, 2, 3, 4, 5 wave to the downside. You've got your A, B, C correctory wave, and within this B wave, you know, you can count these ones as well if you want, but as these have been and gone, we only really care about the wave count right now. You can see perfect 1, 2, 3, 4, and like I said, very unambiguous for this one, all the way up here at 5. Now, am I saying that we've 100% topped out at this very second in time? I wouldn't be saying that, because as you can see, we do have a pretty bullish bull flag right now. I am actually going to be away for the rest of today, and I'm also going to be away for Friday, so I'm going to give you an update when I come back over on the weekend. So this is just a quick video to tie us over. If you have been keeping up to date with my channel, we've been talking about minor capitulations, you know, these stock market charts, you know, on-chain metrics, you know, all of these things are still 100% in play. So in terms of the S&P 500, bearish 5 wave count is just completing. If you're getting bullish at this area after you've just completed an ABC retrace, you're probably going to end up being exit liquidity. So be extremely cautious. If we do come over to the weekly time frame, like I said over in Twitter, I guess in hindsight it was obvious. In terms of the daily time frame yesterday, I was wrong. In terms of the higher time frames, I'm extremely confident in all my analysis. You can see the downtrend is absolutely still intact, and we actually talked about this in one of my most recent videos. We did highlight that every time we topped out just above the EMA ribbons. So, you know, we're above the EMA ribbons now. There is a possibility that we can push up a tiny bit higher, literally about 1% or so, which is why I'm saying if you're bullish now, yes, the S&P 500 could rally 1%, Bitcoin could rally 2, 3, 4, 5% maybe, but then it's going to be boom, curtains, in my opinion. Now, looking at the stock RSI, and in general, looking at every single momentum indicator you've got, you can see a lot of these spikes correlate to the rolls over to the downside, and the most brutal rolls to the downside we've had is probably this one right here, when the stock RSI became completely overextended and went all the way up to 100. So once again, as you can see, we haven't quite stopped ascending at this moment in time. We haven't crossed bearish, which is why I'm saying, at least in the lower time frames, do be cautious. I am, like I said, going to be away for today, tomorrow, going to come back on the weekend. And when I do come back, I think, you know, whether we top out now or whether we top out in the next 2 days, I believe this bearish 5 wave count is going to be complete by the time I come back and re-update you on the analysis over the weekend. So in terms of the bond market, the US 10-2 is decreasing to the downside. I don't have time to fundamentally explain the 10-2 in every video. This is why I have an educational series. If you want the prerequisite knowledge for the fundamentals, go check out this video, Understanding Market Conditions. If you're not interested in the fundamentals, you only want the technicals, all you need to know is the 10-2 decreases to the downside and the profitability of government bonds, specifically the 2-year. The 2-year is overpowering the 10-year, and right now the 2-year is still at very elevated levels. We're making higher lows, higher highs all across the board, and in my opinion, we're in a pretty nice bullish pennant for the 2-year. So the 2-year, in my opinion, should start to break out relatively soon. And with this, you can see, you know, the US 2 minus the US 10 minus 2 is down about 3% today. So it's looking like we've topped out. If we slap a pair of EMA ribbons on there, we haven't quite hit the EMA ribbons, but we're very, very close, which is why I'm saying be extremely cautious. This 5 wave could push up a tiny bit higher, and if this 5 wave did push up, you could see maybe 4,140 for the S&P 500 before you roll back down. This would be a beautiful 1, 2, 3, 4, 5 within a higher time frame A, B, C. So stock market's unchanged, bond market's unchanged. Nothing's changed in the lower time frames, daily time frames, weekly time frame, monthly time frame. Over on Bitcoin, you can see the monthly candle has just opened, and this is the bull market that crypto Twitter is referring to. So as you can see, the monthly candle is already red, and if we slap a horizontal ray over it, there you go. You can see, I mean, we're literally breaking down on the monthly time frame beneath the lows at 17,600, and yeah, it's not looking good whatsoever. I'm going to talk a little bit more about the volume profiles in a second, but over on the squeeze momentum indicator on the monthly time frame, you can see bearish momentum is absolutely still in control of this market. Let's switch over to the Heikenashis, and you can see that we've been in a 1, 2, 3, 4, well, let me start from here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13-month brutal downtrend without any bounces, at least over on the Heikenashis. Bear in mind, Heikenashis open approximately halfway through the candle body, so it's a really great way to take away the noise in the markets. But even when you're looking at Japanese candlesticks, I mean, the monthly time frame is already bearish. So the notion that we're in a new bull market is pretty funny to me. Let's head over to the weekly time frame. On the weekly, yeah, you can see we're bouncing back up, but like we highlighted in our first chart, which was right over here, it looks like we're being magnetized back to these lows, 17,500, 17,600. I'd personally be looking at opening a few shorts, maybe around 18 or so. Like I said, I'm going to be gone for the next day or so, so I do want to come back to these markets and see how this reversion to the mean plays out before I do run into any trades. And this is why I always do tell you, trade from a position of strength. We can be confident in analysis, but unless we're coming up to a position of strength, there is no need to short. This is why we're successful traders. We sit on the sidelines and we're very, very patient until these positions of strength reveal themselves. So in terms of Bitcoin, like we said, we're pushing back up to this 17,600. You can also see this correlates to a decent area of the volume profiles because we've accumulated a lot of volume around here. It makes sense for market makers to want to grab this and break back down to the downside before we obviously have that next meltdown. And you can also see, if I draw, let's just keep it from here. You can see a beautiful shoulder. It's a little bit easier to see on the daily. Head, boom, shoulder. I mean, there's a few different ways you can draw this. You could even draw it from here and call this one a fake out if you want, but nonetheless, you do have a head and shoulders playing out on the weekly time frame. Well, it has already played out. You've broken to the downside. Neckline is approximately around 17,760. Perhaps you could want to draw an angled trend line, and then you could see, hey, you know, we could push up to 18.5, but in my opinion, that is pretty much the absolute highest that Bitcoin will be going in the next few days before we do have that meltdown. Now, over on the monthly time frame for the total cryptocurrency market cap, you can see, once again, this was the lows for last month. As you can see, we were basically chopping on this floor, this floor, this floor, this floor, and then, you know, we broke down into new lows over here, and we're on the monthly time frame for the total cryptocurrency market cap. So this really means that, you know, while Bitcoin is a little bit choppy, some of the altcoins are doing relatively okay. If we do look at the total altcoin market cap, we're a lot closer. In fact, we're just above some of these lows over here. On the total cryptocurrency market cap, you can see we're really struggling right now, and we're just sitting beneath the previous monthly close. So yeah, in my opinion, I think we're grabbing liquidity at this range before we move back down to the downside. And you can also see the area that we're at right now all the way down to these much lower levels. I'm highlighting this area here. You can see there's an absence of volume within this box. I'm going to change the color of the box to blue, blue, boom, and you can see, this is the area where there's not much volume traded. There's a little bit more volume traded up here. What do I think we're doing? I think we're grabbing liquidity. Market makers need that liquidity to push back down to the downside, and at this moment in time, like I said, the charts really don't look too ambiguous to me. It really looks like another liquidity grab, just like we did time over time over time. The last liquidity grab that we mentioned over on the channel was right here. We had a big, well, relatively big point of control. Bear in mind, the point of control is technically here, but if I just focus on this range, this volume profile and this volume profile were your points of control. What did we do? We broke down to the downside, we pushed back up, we grabbed liquidity from this big old cluster before moving back down to the downside. What are we doing right now? We've broken to the downside again. We've found ourselves in an area where there's not too much volume accumulated, and we're pushing up to the previous lows. We're pushing up to the neckline of this head and shoulder, and we're also pushing up to this area over on the volume profile. So once again, if we're looking at it in this perspective, this also does look like a liquidity grab. Now, if we pull up the EMA ribbons, I really don't think that we're going to be reverting back to the EMA ribbons. In fact, we haven't had a successful retest of these since 43,000, but nonetheless, I will update you on these when I do get back to the channel in the next couple of days. So let's head over to some on-chain metrics. Like I said, if you've been watching my analysis, if you've been watching my stock market videos, looking at the minor capitulations, looking at the Bitcoin being dumped on exchanges, and in general, if you've watched all of my Bitcoin videos, I still wholeheartedly believe this analysis is absolutely playing out. You can also see Bitcoin active addresses are starting to push up. As we all know, if you're a veteran of the channel, a spike in active addresses almost always correlates to a top. You can see, boom, this correlates to this top over here. You can see a big old spike over here. Active addresses actually went down a bit, but they were at elevated levels and they continued to spike. And during this big spike, we continued to roll back down to the downside. So bear in mind, active addresses don't always explain every uptrend and downtrend, but as a general rule of thumb, if there's tons of senders and receivers in the network, most of the time people are sending their cryptocurrency from one wallet to another, hardware wallet to Coinbase or Binance, so they can liquidate. And as we know, if we look at these price targets, you can see massive downtrend, massive downtrend, massive downtrend, massive downtrend. And the last time we had a spike in active addresses is, boom, right now. We're having a pretty big run up to the upside in terms of active addresses. So I do think something like this is once again going to play out. I actually drew that down to 500. I don't think we're going down to 500. That's just a rough draft. In the immediate short term, 14,000 is my price target. If you have been, watching all my videos, it is this range down here. So this is what I think's in play. I think we're in an area with lackluster volume. Market makers want to grab liquidity. They want to retest the range lows at 17,600. They want to confirm the head and shoulders as resistance again. And in general, the majority of it is they just want to grab that liquidity before breaking back down to the next volume profile, which is round about 14,000. Well, 14,000 is more in correlation to this top over here than it is for the volume profiles. In fact, the volume profiles, they don't have too much support until you start coming down to about 12,000, which is also another target of mine, but this is not a target for this week. This is not a target for this month. I think this one will take a little bit of time, but I do think we're heading down to this 14,000 region. So, like I said, not an awful lot to update. Absolutely nothing has changed. I mean, really, come over to the daily time frame, and this is the bull market in question. We went up, what was it, 3% yesterday? Oh, 4%. So 4%, and as you can see, we're still beneath the 17,600 lows. So nothing has changed whatsoever, and I can't emphasize this enough. We're not even at the top of the range yet, so let's not get ahead of ourselves. So Bitcoin active addresses are spiking. We obviously know this is bearish. There are lots of senders and receivers in the network. There isn't currently another big inflow of balances on exchanges. However, the balances on exchanges is still at very elevated levels, and it's slowly trickling up, which reminds me of this phase over here just before the final capitulation. So we'll keep you up to date on this. I'll definitely be updating, technicals, stock market, on-chain metrics, all of this good stuff when I do get back over the weekend. Also, I'm going to zoom through these on-chain metrics because we've been looking at quite a lot of them recently, the whale wallets, retail wallets, etc. Let's look at the Bitcoin ratio of retail to institutional addresses. This is, once again, pushing to the upside. Blue line has had a massive run up yesterday. In fact, this is definitely a huge daily increase. I mean, the Bitcoin retail to institutional addresses ratio is on a parabola to the upside, and this is not a good sign. Typically, when it's on a parabola to the upside, price will come back down to the downside. So take that into consideration. If you're looking at, who's buying right now? Are whales buying? Are institutions buying? Is the smart money buying? Let's find out. Look at the Bitcoin balances with more than 1,000 Bitcoin. Let's zoom in. They took a plunge into new lows yesterday. Who's buying then? Let's look at the Bitcoin wallets with more than one Bitcoin. The retail traders, the shrimps, the crabs, and they have started drastically accumulating yesterday. About another 1,000 Bitcoin, let me correct that, another 1,000 addresses with a balance greater than 1 Bitcoin have been added to the network. So, like I said, just zooming through this on-chain metrics, the whales, the institutions, the smart money are not buying. Retail is buying. The retail to institutional addresses ratio is moving to the upside. This is bearish. And all in all, like I said, the markets really do pick and choose what data they want to, hear and not hear. So I really do think this nuke is absolutely incoming. And let's wrap up the video. Yeah, we've looked at this chart. Let's wrap up the video on the book depth for the E-mini futures for the S&P 500. Now, let's just look at it from here. Now you can see at this moment in time, well, yesterday really, we had one of the largest increases in the past few days in terms of liquidity conditions. And as you can see, if we look at the mid price, which is this blue line in the middle, you can see boom, 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 boom. We're just constantly making lower lows and lower highs for the mid price. And in terms of the book depth, we are at absolutely extremely elevated levels of liquidity right now. So if you're new, I will show you what this means just very, very quickly. So if we do head over to the S&P 500, as you can imagine, when liquidity conditions are at their strongest, you're at these type of levels over here. So if we do come over, what was this date over here? 16th of August up until about the end of August, we were at extremely elevated levels in the markets. Let's come over to what happened in the book depth for the E-mini futures. And as you can see, where was the top? August 22nd. And also you had a huge spike on the 15th before having a run to the downside. So this chart just really shows us the liquidity conditions for the book depth in the S&P 500. And once again, this previous spike correlated to this spike over here. If we come back, you can also see a big spike round about the end of March. Let's come back over to the S&P 500. When was the end of March? It was right here. And look at this run to the upside on the weekly time frame, and look at the liquidity conditions right now. They are at the highest they've been since August. So in my opinion, what do I think is happening? I think we're having a reversion to the mean. I think liquidity conditions are absolutely overextended. And if you're looking at your financial conditions in general, they're really not in accommodative territory to support this overextension, which is why I'm saying when we're looking at the book depth, this is an absolute volume overextension. Monthly timeframes opening, coming back to these previous ranges. And in my opinion, when we do come up to them, we are going to flip them as resistance and break down. So I'm not entering any shorts right now. If you have watched my previous videos, you'll know that I'm actually not in any shorts whatsoever, and I've been sitting on the sidelines for quite some time. If you watched yesterday's KDA video, I said the next trade for KDA is up here around about 112. This is still absolutely in play. If we do come up to this level, I will be shorting. So has my analysis changed? Has my price targets changed? Has anything changed other than a slight, 3-4% pump on the daily time frame? Absolutely not. Nothing's changed. Balances on exchanges are at elevated levels. The retail to institutional addresses are running to the upside. Retail's buying. Institutions are selling. Liquidity conditions are overextended. We've had a reversion to the mean. We're completing this bearish five-way for the S&P 500. We're completely overextended for the stock RSI, with the possibility, of course, like I said, of pushing up a little bit higher to maybe round about 4,140, which is why I'm telling you now, and as I always tell you on this channel, short from a position of strength. We may be bearish, but we are unbiased bears, and we short from positions of strength. We don't just run into every single short that is presented. We wait for positions of strength, reversions to the mean, and this is why when we do enter our next Bitcoin short, it is probably going to be another extremely profitable trade. So that's all I've got for you for this episode, my friends. Like I said, going to be gone for today, going to be gone for tomorrow. I will be back over the weekend. As of now, my friends, that's all I've got. Cowboy out. Peace.